This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. The 2026 tax filing season opened on January 26th. The One Big Beautiful Bill Act passed in July 2025, adding new deductions for tips, overtime, auto loan interest, and seniors aged 65 and older. Early IRS data through February 6th showed the average refund at $2,290, up nearly 11%. But with ETC and child tax credit refunds held until after February 15th, the real test would come in late February when millions of additional checks started flowing. On Friday, February 20th, the IRS released new filing season statistics through February 13th. The average tax refund surged to $2,476, up 14.2% from $2,169 last year. About 13 million refunds have been issued, totaling $32 billion. President Trump claimed refunds are substantially greater than ever before, with some estimates showing over 20% being returned. The IRS emphasized these numbers still don't include millions of EITC and additional child tax credit refunds, which are held by law until mid-February. The agency expects refund totals to surge in the coming weeks. Analysts project Trump's tax law changes could create about 1,000 of stimulus per household on average. Key changes driving bigger refunds include a larger standard deduction of $31,500 for married couples, a higher child tax credit of $2,200 per qualifying child, the new senior deduction of up to $6,000 for those 65 and older, and new deductions for tip income, overtime pay, and auto loan interest claimed on the new Schedule 1A form. Tax refunds are genuinely bigger this year because Congress cut taxes retroactively for 2025. The biggest benefits flow to middle and upper-middle income households earning between $60,000 and $400,000 annually. Lower-income filers with little tax liability don't benefit much. The very highest earners are ineligible due to income limits. This is the first filing season reflecting major tax cuts since 2018, and millions are seeing the impact directly. If you're a senior over 65, have kids, live in a high-tax state, earn tip or overtime income, or bought a car with a loan in 2025, your refund could be hundreds or thousands higher. Seniors claiming the new $6,000 deduction are reporting significant increases. Families with multiple children benefit from the larger child tax credit. Taxpayers in states like California, New York, and New Jersey see relief from the higher SALT cap increase to $40,000. If you haven't filed yet, make sure you're using Schedule 1A to claim all new deductions. The IRS strongly encourages direct deposit. Paper checks are being phased out. Most refunds arrive in fewer than 21 days with direct deposit. If you claim EITC or child tax credits, expect your money by early March. The IRS releases its next major statistics on Thursday, February 27th, covering refunds through February 20th. That update will include millions of EITC and ACTC refunds and show whether the 1,000 average increase holds up. If you haven't filed yet, the April 15th deadline is approaching. Double-check IRS guidance on new deductions for tips, overtime, seniors, and auto loan interest. This is the biggest tax change in years. Getting it right could mean hundreds or thousands of extra dollars. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.